Hello everybody. So this video is about Celsius. Celsius is the hottest stock in the consumer beverage sector. The product, for the past 5 years, I have seen this product take over the United States, take over the local convenience store, the local grocery store. Lots of people buying this product. I have seen in real time them gain a bunch of market share over Red Bull and over Monster. And of course, Red Bull's a private company, but Monster, if Monster is any example of how performing this space can be, how high performance a stock in this space can be, then Celsius, in my view, should be trading at a much higher valuation, especially after this Q1, which looked very, very great. They posted outstanding year-over-year revenue growth. I'll get to that in a second. I loved the Q1, and I find the stock too cheap. And let me just begin this video by the valuation. The valuation. It's all on this channel. I compare stocks. I have hundreds of stocks in a spreadsheet, and I compare them on enterprise value over gross profit over revenue growth. Enterprise value over gross profit over revenue growth. And it's my spin on the PEG ratio, right? And so usually a stock for a company that is so well known, a stock that is so mainstream, if I may say, a stock that I think most people would agree is winning in the marketplace, should not be trading at a 0.14. Like take another sector. Take the sector, for example, of like fancy coffee houses like Dutch Brothers or like Shake Shack, like, casual fast food. These stocks are trading in the stratosphere. They're super expensive. I would argue a Dutch Brothers or a Shake Shack is equally cool as a Celsius Holdings, as a Celsius is cool. Yet for some reason, this stock has been entirely forgotten by the market. It's been left for dead. I do not understand this stock. And as an example, so the hype is gone on this stock. As an example, let's just look at the price. There were a few months where this stock was trading between 80 and 95, let's call it. Back in early 2024. But you see, back then, when this stock was trading in the $90, $80 range, it was a way riskier stock. Back then, when it was trading at this level, the concern was Alan Inu was going to eat Celsius's lunch. And then what happened? They bought the competition. And ever since they bought the competition, I guess markets have screamed acquisitions bad, or I guess the market has moved away looking for growth in the consumer sector. Now they're looking for growth in AI, and they don't care about growth in the consumer sector. The stock seems to be trading on vibes. I don't understand the price action in after hours. I absolutely understand. It trades on vibes, like the marketing of Celsius. They have like fruit vibes. Like the marketing is very Gen Z. The marketing is very trendy. Celsius and Alani, they have the trendiest drink around, right? Especially Alani, right? Selling an energy drink to women takes more than just taking a Red Bull can and making it pink, right? Or taking a Monster can and making it pink, which is kind of what the competition does. And I would argue Celsius very, very much owns this market. Lastly, so this is updated. So this number is all of the updated numbers. The gross margin is excellent at 50%. That's the latest number. EBITDA margin holding up at 23%. And by the way, forward revenue growth next 12 months. This is the analysts' aggregated number. 40% forward next 12 months. That's the analysts' number. And my guess is that after this call, analysts may actually upgrade this top line. So we'll see. It could grow perhaps faster than that. I just don't understand this price action. I don't understand why this stock is so cheap for being the hottest stock in its sector, right? Coca-Cola is not the trendy energy drink anymore. Pepsi is not the trendy energy drink anymore. Red Bull, you could argue, is not growing as fast. Monster perhaps still has a little bit of a spotlight, but I would argue a few years from now, the spotlight will be on Celsius and Celsius's product. So now let's go ahead and talk about the presentation, the earnings presentation. So you can see 21% of the energy drink market share in the United States. They are at 99.5% of retail outlets. It's true that, even my local no-name grocery store has a fridge with a bunch of Celsius in it. All gas stations, everybody sells Celsius in the US. It's everywhere, right? Retail sales through the roof. Number one in dollar growth portfolio in RTD Energy. Number 3 energy drink portfolio in the United States. Of course, Monster and Red Bull, they're neck and neck. Actually, Red Bull, Monster actually in the US, outcompeting Red Bull. It's funny, I always thought Red Bull was kind of number 1, but they're about the same size, Red Bull and Monster. But you can see the third here, it's Celsius, and they're not that far away. When you look at the valuation disconnect between say Monster Energy and Celsius, they're not that far away. To me, Celsius is trading at an enormous discount. And Celsius owns Alani Nu, and Alani Nu is very special because typically the female consumer has been very much underusing energy drinks, very much a lower user of energy drink, and that's changing. That is changing with Alani Nu. 70% of women age 18 to 44 have had Alani Nu. And in fact, I think the consumer of Alani Nu itself is something like 90% plus woman. That's the first energy drink that is actually going exclusively after women, right? And you can see how Red Bull's marketing or Monster's marketing is going after more of a extreme sportsman type of person, right? And Celsius is not that. Celsius is kind of this kind of stuck in the middle brand, but that has a negative connotation. Like Celsius is kind of like for everyone. Celsius also did really well on the marketing in that I would argue it's socially acceptable to have a Celsius in the morning in place of a coffee. That may be the only drink, at least my vision of US popular culture, that may be the only drink that is actually socially acceptable to have in the morning at 6 a.m. instead of a coffee. I am not sure a Monster or a Red Bull is as socially acceptable as a Celsius, and that's also important, of course, when you take into account that these drinks are sold in stores, right? They're sold in physical locations, mostly physical locations. Although Celsius is number 1 on Amazon, by the way, that's the top energy drink sold on Amazon. This is going to be sold more and more online as well. Anyways, I ramble. Let me go on. Let's look at the growth, the year-over-year growth for Q1 2026 from Q1 2025, from Q1 2025 to Q1 2026, plus 126% growth. And of course, why is that? Well, this is it. This is our first full year with the entire Alani Nu numbers. Acquiring Alani Nu essentially doubled the size of the business, doubled the sales of the business. And this is something, a stock I follow, for example, Reax acquired Remax, and you see the market criticizing, saying, oh, we're now going bigger, we're going to be a behemoth, it's going to slow down the sales. It's like, you just double your sales when you acquire your competitor. So yeah, sure, the sales are never going to grow at 126%. Again, unless there's nobody else to acquire. So no, that's a one-time thing, of course. And now we're going back to 30 to 50% year-over-year growth. We're going back to that, and the comps are gonna look a little tougher. But like the market sometimes misses the forest for the trees. That Alani Nu acquisition, which, by the way, the stock has not recovered from that, right? The market is still stuck in acquisitions bad. That acquisition made the company twice as big. So much better. Anyways, so much better. And of course, then after that, shortly after that, they acquire Rockstar acquisition. To me, Rockstar is a drop in the bucket. I understand why they acquired Rockstar, because they have a woman-focused drink. They have an all-gender, everybody-focused drink. They wanted to have a manly-focused drink in Rockstar. In their presentation, they actually show something like 70% of men under 40 have had a Rockstar. But to me, Rockstar is almost a distraction. It's an ancillary business. I think Red Bull and Monster, got the male market or super male-focused market cornered. They got it cornered. I think Celsius has a blue ocean when it comes to the energy drink for everybody and when it comes to the woman's energy drink, and I'm very, very fine investing in just that part of the segment, But you can see, they show it really well in the marketing here. You can see Celsius, orange, pretty neutral, and then they have Alani Nu, pink, and everything for women, and then they have a rock star for men. That's pretty much, I think, how they're going with their marketing. You can also see they're marketing more people, more places, more often. They're at Subway, for example, right? Pretty interesting. That's also what I told you. It's like I think Celsius has a shot at selling a lot of drinks in the morning. And why is that important? Why do I focus on selling a lot of drinks in the morning? Because my thesis of investing in this company is, and you have to know that I missed Monster. I was never in Monster. But if you look at the chart of Monster Beverage, look it up, go look Monster Beverage stock, right? Look at the total return of Monster. Monster is one of the top performing stocks of the past 20 years. Why did Monster do so well? Why did Red Bull, even earlier than that, do so well? Because energy drinks are all about the disruption of coffee. Coffee is a commodity. Coffee is tough to differentiate. Starbucks tries to differentiate by adding a bunch of sugar to it and making it look more like an ice cream or something, or hot cocoa or whatever. But it's actually very tough to differentiate yourself on coffee. Energy drinks are trying to disrupt coffee. They're trying to steal the addictive habit of drinking coffee, because let's not face ourselves. Let's face ourselves. Like, the reason why coffee is so popular is it's addictive, right? Most people need to keep having coffee, right? And so these energy drinks, they take the same energy compound as coffee, which is caffeine. People need to get back caffeine, but they package it into a taste that is perhaps less of an acquired taste. And you're going to have more and more Gen Z who do not have the acquired taste of coffee. Coffee is an acquired taste. Celsius tastes good right away. Alani Nu tastes good right away. Coffee is an acquired taste, and coffee is a commodity, and that's what these companies are trying to do. They're trying to get the commodity out, and they're trying to replace that by a brand. This is very similar to Visa, MasterCard, and Amex. Yeah, they all compete against each other, but they also co-opete together against cash. They're going after cash. I would argue, at the grocery store in the aisle, Red Bull and Celsius, they take share from each other, sure, but they also don't lose sight of the fact that they're both competing against coffee. They're both competing against coffee. Coffee may be the biggest loser. And by the way, if you're in Europe, Celsius is taking over Europe. It's coming to Europe. Of course, Europe, in some areas, very strong coffee culture. I think that's also, gonna be some disruption coming up here. And it's about, that's what they say, it's about growing the pie. So Celsius actually is responsible for the growth of the sector, for the growth of the pie. For growth of the energy category sector, Celsius is responsible for a third of that growth. But within that sector, Celsius is actually taking share. It's taking share from the two giants, which are Red Bull and Monster. And if you want to pause the video right here, this is where it gets interesting. You can see consistently the Celsius portfolio keeps going up as a part of market share, and the market share of Red Bull and Monster keeps going down. If you look at this chart of market share, and in percentage, right? That's market share in percentage. This is clear as day. This chart shows it clear as day. We're now 20.9%, and now if you look at, say, a Monster is a 32%, right? If you go back in 2023, Celsius was 8%. Monster was nearly 39, or they were in the very high 30s. Now they're in the low 30s, essentially high 30s to low 30s, and of course Celsius moved from the high single digits to now into a two-handle double-digit 20%, which is a pretty impressive growth. And frankly, if you look at that Celsius portfolio number, and you live in the real world in the US, you see it. You can't unsee it. You really, really can't unsee it. And the bears love to criticize. And frankly, I do not put much credit into the bear narrative. Bear narrative is what? Costco dupes. Remember, the stock dropped a lot when Costco introduced a supposed dupe. I don't buy that. I don't buy that. It's going to make a big dent. There's always a cheaper copy, and I'm more in the camp of believing that copy in this sector is flattery. If anything, Celsius, Costco introducing its own energy drink, if anything, that hurts coffee even more. And then you add aluminum prices. Some people were having that narrative that, since Celsius has a lot of inputs with aluminum, maybe the prices would hurt the margins. And to me, this is obviously very, very temporary to me. So I'm not worried whatsoever. This is a long-term hold for me. I like this stock very much. Q1 confirmed that, and Q1 definitely confirmed that I like Celsius Holdings very much. It is too cheap at a 0.14. And cheap stocks are becoming rarer and rarer these days. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.